So many of us have app fatigue. So many clients, so many apps, and so many different payments, charges, receipts, subscriptions, discounts, bundles. It's almost impossible to keep track of. What if you could have just one subscription for 50 different integrated business apps? You can. It's called Zoho One. Stay tuned to hear more from our sponsor, Zoho, later in the episode.
The thing that's shameful about this whole thing is like what Armanino and Mazars were doing is they weren't doing real audits. They were doing, these proof of reserves. I'm doing air quotes there.
And when they do this, they're never, I think the interview you just played, they'd never actually look at the liabilities when they do these proof of reserves.
It's just looking at the assets at a point in time, and it's not even clear what sort of due diligence they're doing on those assets.
Coming to you weekly from the OnPay recording studio, this is the Cloud Accounting Podcast.
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
How you doing, David?
Good. You can tell it's starting to get close to the holidays. I feel like there wasn't a lot of accounting news, but there's just like one major accounting news that just was surprisingly bigger than we expected, I think.
Well, and it was perfect because it comes on the heels of QuickBooks Connect in Las Vegas. QuickBooks was in the FTX scandal. It was centerpiece of the testimony in front of Congress this week. It was fantastic. And so, of course, I brought that clip to play for our listeners in case they haven't heard the whole thing. It's wonderful. When QuickBooks comes out of the mouth of the guy who cleaned up Enron, and is repeated by a congresswoman incredulously, you just got to love it, right? It's cloud accounting in the mainstream media. And of course, everybody got it wrong, David, as you pointed out on Twitter, and as we will discuss. So we'll talk about...
Is like, have we been talking about crypto and FTX and Bitcoin and all this a little bit too much? And I feel like every time we try to get away from it, like it pulls
comes back.
Like, it pulls us right back in. Like the biggest headline this week related to this was about QuickBooks, which is just silly.
I have a funny story. I have a funny Zoom story for you as well about my mom that I think you'll enjoy. I got some remote work stuff. I've got a bit of app news. Oh, audits. We've got the PCAOB not too happy with audit firms at the moment. Something like a third of audits are insufficient, failing their examinations. A whole third of audits can't be relied upon. And that might bring us back full circle to FTX. So, David, I'll let you pick first. Do you want to hear my humorous Zoom story?
Yes. Let's start with your humorous Zoom story.
Humorous Zoom story. Okay. So, my mom and my dad live in our neighborhood. So they were having work done on their house. So they had to get out of the house, or my mom wanted to get out of the house while my dad supervised it. So she said, Blake, hey, can I come over to your place and hang out? And it was a weekday. So I said, yeah, sure, absolutely. I'll be up in my office. You can hang out downstairs, do whatever you want, make yourself comfortable. So she comes by and is working at the dining room table, and then has a Zoom call in the afternoon that she wants to make sure that she's ready for. She is a registered dietitian, and she's a very spiritual person. And she teaches a class on mindful eating.
Okay.
Mindfulness and eating. Yes. And it's a way to, eat more mindfully, you eat less food, you eat more healthily.
Yeah. We have a book in our kitchen. We've tried this exercise a couple times.
Oh, you have?
Dinner
Okay.
Table. Yeah.
Yeah, it's like, you eat and you shovel the food into your mouth when you're looking at your phone, right? All of a sudden it's gone. You've eaten too much, right? All that stuff. Anyway, so she teaches this class, and it's kind of new for her. So she's a little nervous about it. So, I make sure she's got the internet hooked up. She's up in my son's bedroom, going to do the class, and everything's going great. She's doing the Zoom, and she gets towards the end of the class, and they do a meditation. And so for the meditation, everybody closes their eyes, and they just sit in silence for like a few, I don't know how long actually. I'm assuming it's like a few minutes at least, right?
Yeah.
And so my mom closes her eyes, and then when she opens them, she realizes that her computer has gone to sleep because she plugged it in, but she plugged it into the socket, which is connected to the light switch, which was turned off.
Okay.
So her computer had gone to sleep during the middle of the Zoom. And so she's frantically trying to get back and accidentally turns it off while she's doing that. So she then turns her computer on, gets Zoom back going. It's minutes and minutes at this point, right? And then finally gets back into the Zoom. Everybody's still meditating.
Nobody knows that she left and came back.
Nobody knows that she left.
That's great.
And so she says, oh, everybody, welcome back. Thank you. That was a little bit longer meditation than we normally do, but you all did great. Yeah, close out the session. So that's
just stayed on.
It's a Zoom catastrophe that turned out just fine.
And we're still having Zoom catastrophes, almost 2023 now.
I haven't had like one of those, I used to have those all the time when it first came out, but now it's like everybody generally gets on the meeting, right? Like people have stopped having these like audio, video, horrible issues, at least for me anyway. I don't know.
And the kids went back to school, so you don't have those people hacking in and just doing pop-ups and uninvited attendees. And Actually, I do have a Zoom story.
You do?
I'm confused by this. So we'll just jump into FTX.
Okay.
So scam bank fraud.
Yeah.
We can call him scam bank fraud. He was supposed to testify to Congress this week.
SBF was supposed to testify. Did he not do it? I guess he didn't.
No, he got arrested in the Bahamas.
Oh, yeah. Can't really testify. Yeah.
And so, this is what I don't get. Like, how convenient.
Oh, you think there's some sort of like deep state that wants to prevent him from testifying? I mean, they all took his money.
If you put him so he's sitting there in jail. Mm-hmm. Can he do a Zoom with Congress?
Yeah, why not, right? There's no excuse.
But he just gets to not show up. Sorry, I got arrested. I don't get to show up to your little meeting you're having. Or is he not there on purpose? Right.
That's a good question.
These are tinfoil hat things, but I think it's kind of convenient.
Well, you brought up FTX and the congressional hearings, so we got to play that clip. How did QuickBooks get into the FTX crypto exchange collapse story? Now we're going to find out.
Mr. Ray, you have compared FTX as worse than Enron. Can you please elaborate on some of the specific ways FTX is worse than one of the largest corporate frauds in history?
The FTX group is unusual in the sense that, I've done probably a dozen large, scale bankruptcies over my career, including Enron, of course. Every one of those entities had some financial problem or another. They have some characteristics that are in common. This one is unusual, and it's unusual in the sense that literally, there's no record keeping whatsoever. It's in the absence of record keeping. Employees would communicate, invoicing and expenses on Slack, which is, essentially a way of communicating for chat rooms. They use QuickBooks, a multi-billion-dollar company using QuickBooks. QuickBooks. Nothing against QuickBooks. It's a very nice tool, just not for a multi-billion-dollar company. There's no independent board, right? We had one person really controlling this. No independent board. That's highly unusual in a size company this is.
QuickBooks.
It kind of reminded me a little bit of when Mark Zuckerberg was testifying to Congress, and it was very clear, like, nobody in Congress has any clue about technology.
Yeah. And
now, we do know there are some people who represent us in the Capitol that understand accounting. Some are actually accountants. Not enough. But, she seemed very confused.
Was that Congresswoman Wagner saying QuickBooks, what is QuickBooks? Or QuickBooks as in they were using QuickBooks?
What is this word you said? Yes, it was not. It did not come off as she's like, oh, yeah, I've heard of QuickBooks and they probably shouldn't have been using it. It didn't come off that way.
Oh, really? See, to me, it came off that way. That's how I interpreted it. Like the incredulity of a multi-billion-dollar company using QuickBooks. But I could see how it could go the other way too. Like, doesn't even know what it is.
And what prompted me about this was really tweeted out of context from somebody who's been covering. Let me get her exact title here. She writes the #1 finance and newsletter on Substack. And she's been on Fox and Bloomberg, and she's, what is her name? Genevieve Roach Decter, CFA.
Yeah, I follow her. She's awesome.
But so she tweeted this quote, basically based on what you played.
Yeah.
And she just flat out said FTX used QuickBooks for accounting and then put a little emoji red flag.
Yeah.
And like, that's just so out of context.
Right. So then you very astutely and correctly said it's not that FTX used QuickBooks. That's not why it collapsed. But,
you could have had any expensive ERP and it doesn't matter.
Well,
like it was.
So there's two things. There's two statements in this clip that we just played that don't make sense put together. One is Mr. Ray, the guy overseeing this whole cleanup, whatever, John Ray III. He says there were no records, but then he says they were using QuickBooks. So what is it?
Well, maybe they signed up for everybody starts a new business. You have really like, hey, let's get accounting software. They signed up for QuickBooks and probably never actually did anything with it.
Right.
It's probably empty.
So on Twitter, the NetSuite sales reps were having a field day with this, saying, oh, well, if FTX had been on NetSuite, this never would have occurred, or making that. I guess it wasn't on Twitter. It was on LinkedIn because that's where they love to live, right?
Yeah, the sales reps, the sales bros, yeah.
Yeah, the sales bros. Yeah, no, it's funny though, right? Like, I mean, we accountants know that you can do fraud with any accounting system. Like, it doesn't matter what technology you're using. No. If you're going to misappropriate customer funds, you can pretty much do that. It doesn't matter what the record-keeping system is.
But the giveaway to me that they weren't using QuickBooks is I think you found some other tweet or some information that said they didn't even have a bank account at FTX. They were just using the
Alameda's.
The research company's bank account.
This is not totally clear to me, but when they started FTX, I guess FTX couldn't get a bank account. So they were just using Alameda, the related entity's bank account, and then doing like a due to from kind of thing. Eventually, FTX did get its own accounts. But the balance sheet...
I was going to say, like, why would you use QuickBooks if you can't connect to a bank feed? If you have a bank account, like, why are you even going to bother?
The balance sheet that SBF sent to the investors was in Excel. Whatever they were doing in QuickBooks was not happening to the extent where they were publishing financial statements using it. But yeah, it was funny. It's just like a weird situation, and now I have a really great sound clip that I'm going to play every time that you mention the word QuickBooks, David.
I know.
It's
QuickBooks.
Fantastic.
It reminds me of this old like NFL meme that's still a meme. He goes around, an old coach of the Indianapolis Colts, and they asked him about making playoffs, and he was like, "Playoffs?" Kind of like that.
Yeah.
It sounds like that. QuickBooks.
There it is.
Oh, that's it. So it's locked and loaded now forever.
Locked and loaded. I can use it whenever I want.
QuickBooks.
This episode of the Cloud Accounting Podcast is sponsored by Liscio. Blake and I talk a lot in the show about client experience. A great client experience may be the biggest impact on a firm's success. Did you know that Liscio is so focused on improving the client experience that they have even gone as far as trademarking, and I quote, Client Experience 2.0. Liscio's all-in-one client experience starts with your own firm's experience. By allowing your team to do more together, having everything in one place like secure messaging, client-facing tasks, file exchange and storage, electronic signatures, client invoicing, and client emails. When you improve your team's experience, your client's experience will follow. With Liscio, clients can use the app on their phone to easily e-sign anything, scan and send you documents from anywhere, send messages, and best of all, pay you. If you want to save 40% of your time by having everything in one place and start delivering a client experience 2.0, head over to cloudaccountingpodcast.promo/Liscio. That is cloudaccountingpodcast.promo/LISCIO. So that's not just what else happened, right? And so with us, again, crypto, FTX, us talking about this on the show again, yes, because of that. But then all of a sudden now accounting firms are saying like, hey, we're going to stop doing crypto stuff.
Yeah. Okay. So that's the other part of the story is now.
Which makes us talk about it too. Right. Like it keeps coming back to accounting.
Oh, yeah.
Yes.
So this is all the accounting angle on this. So Binance, which is the largest crypto exchange, the one that actually arguably caused the downfall of FTX, CZ, the founder, caused the downfall of FTX by saying he's going to sell all his FTT tokens, which were the FTX currency or whatever. He basically, caused the bank run on FTX. Well, they are now under scrutiny because they're the largest exchange. They're the biggest one standing, and they've never been through an audit. They've never done a proof of reserves report. And they engaged, previous to all this going down, I guess in early December, engaged Mazars to do their proof of reserves, which is just, to be honest, like a BS, not really an audit thing anyway, right? And then now all the accounting firms are terrified of all the heat that's happening and have pulled out of doing any crypto stuff. So Armanino killed its crypto practice. Mazars took down all of the proof of reserves reports they've done from their website, and they have shut the doors on that. And I haven't heard about Prager Metis, which was the firm that audited FTX. I haven't heard anything about them. But
I mean, they're being sued.
They're being sued, yeah. But like all the firms are running away from this. Binance is under a lot of pressure, and now Mazars isn't going to do it. So the question is, what's going to happen with Binance? And CZ, the founder of Binance, was pressured on television about this, the lack of an audit. They haven't been through an audit. Do they actually have the reserves to back up, what they say they do? And I'm going to find that clip for you, and I'm going to play it.
We want to be transparent. We want to set the golden standard for reliability, solidness in the space.
So do it. Would you be able to handle it if somebody asked you for $2.1 billion back? Would that be okay? Would you be able to still withstand things?
We're financially okay.
Including you have $2.1 billion to give away. If somebody came to claw that back, you'd still be fine?
We'll let the lawyers handle it. We are financially strong. Even after the FTT price dropped over the last year, we still have $500 million worth of it. $580 million worth of it on the day when we transferred from the address we received a year and a half ago. We never touched it. We actually kind of forgot about it.
But thus far, you haven't disclosed your liabilities. And I wonder why that is and whether you will.
Yeah, so we are working with the firms to do the audit of financials, liabilities, et cetera. But the audits don't reveal every problem. So,
no, but an audit from a Big Four auditor would reveal that, CZ. If you could get a Big Four auditor to say that, if you're saying that some of them don't want to work with you, that raises questions too. They don't want to work with you because you don't have the files and the data that would make them feel comfortable signing off and giving that stamp of approval?
Actually, many of them don't even know how to audit crypto exchanges. They don't really, when they audit, they're very used to auditing a firm.
Does Coinbase, CZ, Coinbase has a Big Four. Coinbase has a Big Four auditor?
I don't look at Coinbase. We don't really look at
I think so, though.
So that was Binance CEO CZ on CNBC being grilled by the anchors. And you can't hear it in the podcast version of this, but the eye roll from the anchor when he refused to answer the question about whether they had the $2 billion was just spectacular. And what that was referring to is FTX bought out CZ, his share of ownership in FTX at a certain point, and they gave him FTT tokens, which are the FTX coin, which are now worthless because everybody decided it's not worth anything anymore, right? It's not tied to anything. So the question is, legally, is Binance going to have to pay back the $2 billion in value that it received from FTX to the creditors, to the depositors in the bankruptcy? Because if you receive money that was obtained fraudulently, you might have to give it back. That's what
happened at the big Ponzi scheme. Madoff stuff, right? Some of the early people who maybe invested $1 million, got $3 million, had to give $2 million back years later.
Yeah, exactly. Right? And that we have that rule for a reason, right? It's to prevent people from gaining from frauds. So even if you're ignorant of it, that's no excuse. So Binance could be in a whole lot of trouble. $2 billion they might owe to the creditors and depositors, former depositors at FTX. So yeah, lots going on there. And I mean, of course, just this idea that, the Big Four don't understand cryptocurrency, right?
Dumb accountants, you can't audit us.
Yeah. And of
our
course,
Ponzi's too complicated.
Coinbase is a U.S. exchange that is public and is audited by Deloitte. And so, yes, the Big Four could audit Binance. Why won't they? I'm going to guess it's because Binance can't get an opinion.
And I think what's happening here, and there's an article in Forbes that talks about the Armanino and its crypto practice in dropping these clients.
Yeah.
And there's a paragraph in there that when you read it, it really makes you think of what's happening here. I'll just read it, I guess.
Yeah, go ahead.
The unit may be folding under pressure from Armanino's non-crypto clients, concerned that reputational risk to the firm will throw their audits into question, according to a source with knowledge of the firm's crypto offerings. So this is kind of amazing to me. So what's happening, right, is I'm legit business W. I don't want to be associated with you auditing my books because you're going to come up with like an idiot for auditing this crypto company stuff wrong. Then people are going to think my audit is going to be questionable.
Right. Yeah. And as they should, right? Like, you wouldn't want to go get an audit from Prager Metis if it turns out that Prager Metis did a crappy audit of FTX and, like deliberately, like didn't like if you're an investor, that's a huge red flag, right? So yeah, it's good. The thing that's shameful about this whole thing is like what Armanino and Prager Metis and Mazars were doing is they weren't doing real audits. They were doing, these proof of reserves. I'm doing air quotes
there. And when they
there.
do this, they're never this. Like I think the interview you just played, and I've seen that they never actually look at the liabilities when they do these proof of reserves.
It's just looking at the assets at a point in time, and it's not even clear what sort of due diligence they're doing on those assets. So this goes all the way back to our discussions of Tether back at the beginning of the year. Tether has been putting out these proof of reserves, or I think they call them attestation reports, from they had this tiny little firm in the Bahamas doing it, Cayman Islands actually, yeah. And then they got BDO Italia now to do them. But all it is a snapshot in time of assets. And it may not even be all their assets. It's definitely not their liabilities. And the idea is, oh yeah, we're proving to our depositors or our investors that yes, we have the money. The money's there, right? But it's only at a point in time, and it's not really clear what kind of due diligence the auditors are doing on this to actually, know that it's there, that it belongs to the exchange or the company. It's just a agreed upon procedures engagement. So it could be different from engagement to engagement. It's not assurance. It does not provide assurance, which is what an audit is supposed to do. And this is why it's unethical, in my opinion, for these firms to have done these, is because they provide these reports, these agreed upon procedures reports to these crypto exchanges. And then the crypto exchanges turn around and say, look, everybody, we passed a GAAP audit. We're totally legit. And they basically... And
the consumer
thinks. Yeah. So the end user then thinks that they're okay, they're safe. The audit firm's brand is attached. And none of these firms, when all this was happening, did anything about it. That their client was misusing this information. Like Mazars didn't do it. Armanino didn't do it. Prager Metis, didn't do it. Whatever. They all just let it happen because you know why? Because if they open their mouths, they lose the client. And now all these reports are down. And so, yeah, that's the question: is what's going to happen going forward? So there was a story here in Accounting Today. Accountant that vetted Binance's reserves halts all crypto work. Mazars hasn't really talked much about this, but they did make a statement to Bloomberg News. Let's see what they said.
But Mazars, so they're parting ways with Binance, Crypto.com, and KuCoin, Kucoin.
Yeah.
So even the big ones.
And they've pulled down the reports from their own website. So basically, we can't rely on them anymore, is essentially what they're saying.
Kind of what they did with Trump, right? They pulled the reports away and said, sorry, these are bad. In a way, right?
Yeah,
they're just like, we can't depend on the number. Yeah.
Well, and
the numbers
that's the 1-2 punch for Mazars is not only did they have to withdraw their compilations that they did for Trump, now they're withdrawing the attestation reports that they're doing for Crypto.com and Binance. That's not a good look, is it? So, yeah, Mazars actually has refused to give a statement. The French firm suspended work for cryptocurrency firms because of indications that markets haven't been reassured by the proof of reserves reports it had published so far, according to an email from the firm seen by Bloomberg News, as reported in Accounting Today. The firm was also concerned about intense media scrutiny, the email said.
So it sounds like the firms are looking for out, which I understand, they're looking out for themselves first.
Yeah.
Over business, right?
Over the public.
Short-term gains or short-term money. Yep.
Which is unethical. And they should be raked over the coals for it. But, it's okay to do that, I guess.
This episode of the Cloud Accounting Podcast is sponsored by Zoho. I'm sure you've heard of Zoho before. We've probably even mentioned Zoho CRM or Zoho Books on this podcast in the past. But do you really know about Zoho? Did you know that Zoho has been around for 26 years? Did you know that Zoho has 85 million users? Did you know that Zoho has over 50 applications? Did you know that Zoho offers one subscription to 50 applications? Did you know that Zoho apps are integrated with other Zoho apps? Did you know that almost all Zoho apps have Zapier connections? Did you know that some Zoho apps can connect directly to QuickBooks Online, Xero, and Sage Accounting? Did you know that Zoho offers an entire suite of solutions to run your firm, including a CRM, expense tracking, bookkeeping, a full office suite, a support ticket system, and workflow automation? Did you know that Zoho offers a suite of solutions for your clients' bookkeeping, including bookkeeping, inventory, invoicing, subscription management, and a checkout app? Did you know that Zoho has an accountants program? Did you know that Zoho advisors get free access to 8 Zoho applications and a dedicated account manager? If you want to learn more about becoming a Zoho advisor, head over to cloudaccountingpodcast.promo/Zoho. That is cloudaccountingpodcast.promo/ZOHO. Zoho, a one-stop solution for all business needs. So I guess the other way this starts tying into us is through the whole apps. Have you ever heard of Evolve Bank and Trust?
Yeah.
So Evolve Bank and Trust, they power Relay, they power Melio, they power lots and lots of different companies, including lots and lots of crypto companies. And so they've been having their own issues of PR battles themselves. And so they have a whole website set up where all they're doing with this one page is constantly putting updates about information regarding FTX and another company called BlockFi that apparently has also had some issues, another crypto company. And so just to reaffirm their statement, or read their statement. To reaffirm our previous statements that we have published publicly, Evolve does not lend against crypto. We do not offer crypto custodial services, and we do not trade crypto or hold any form of cryptocurrency on our balance sheet. Further, Evolve does not, nor currently, at any point in the past, invest in or transact crypto. So that's their statement.
Mm-hmm.
Evolve essentially is an old historical bank that they jumped into the tech world and made some APIs, and they let other people start building on their banking stack.
Right.
And they did it in the typical tech fashion. Get as many people as possible, as fast as possible. And so they've taken on lots and lots of customers, but a lot of these companies have had issues. And the way they were involved with FTX was they were, some people could get a debit card, right, and get a bank account at FTX. Not all the customers, but some could do this. And so that was powered by Evolve, and then Evolve to pull the plug on that. They had to pull the plug on a couple different bank accounts. There's actually another company that Evolve partners with that actually issues a credit card, and they were letting people get credit based on their Bitcoin holdings. And that company is probably going to be in trouble because basically people just aren't paying the credit card bill.
Yeah.
They're just not paying it. And so that's a domino. Now, the other piece of this that I thought was interesting is that I found a huge, huge post that talks about all the other companies they're involved in. And really, if you have, Relay is a good example, right? Because Relay is partnered with Evolve. The money we have in our Relay bank account is FDIC insured, right? Mm-hmm. But what's happening is all these companies that partner with Evolve are playing that card. Even FTX themselves kind of played up that they were FDIC insured in a tweet from July of 2022 that's hence been deleted.
Yeah, they were lying about it. It's just total crap. It's not true at all.
It's not true at all. And then some other ones that are all having problems right now. There's the Doge card, and then there's this company called Zelle, which they position themselves as the bank of the metaverse. And it describes their product as capable of holding USD, crypto, game loot with funds, FDIC insured up to $250,000. So it's kind of on their website, but they're taking advantage of the branding in a way, right? Like, hey, look, the average person doesn't know that all the other stuff, the crypto, the game loot, the deals, none of that's going to be FDIC insured. It's just the actual true money you deposit USD into the bank account. That is. So Evolve, though, so even though they might not be financially exposed to crypto, they're just in a lot of companies that are in messes. And where this comes back to us is these are apps we all use. So that they've been throwing out the word crypto contagion, right? And like one crypto collapse causes another crypto collapse causes another one. But like, is this going to cause collapses in the apps we use in the accounting industry? Some of these startups, some of these smaller apps, because even there's another bank called Mercury. I don't know if you've heard of that bank. Yep. So it's a startup. A lot of the startups use Mercury. It's built on Evolve, Bake, and Trust. Apparently, the VCs are telling their startups to pull their money out of there and move to a different bank. So there's a ripple effect here. Let's just say there is some exposure here and Evolve goes away tomorrow. What happens to certain apps that are built on that? Apps that we use, apps that clients use.
Yeah, it's a huge risk. One more thing before we move on, because we were talking about Tether back at the beginning of the year. That was kind of how we got onto this whole crypto as a scam theme. And we might be proven right by that, David, or be proven right about that. Wall Street Journal had a story about how Tether has been increasingly lending its own coins, adding risks to the stable coin that is an important cog in the crypto system. So the way Tether is supposed to work is that it's a stable coin, meaning that if you give Tether $1, they will give you one Tether coin, and then you can always redeem that Tether for the dollar. Very simple. The question is that true? Does Tether actually have all the dollars? And could they redeem all the Tether for dollars? Because if they can't, that's a scam. And it puts the whole crypto ecosystem at risk because so much of the liquidity in crypto is because of Tether. People aren't using dollars to buy and sell. They're using Tether because it's hard to use dollars because of regulation. But Tether, you can just use as much as you want. So it's sort of a lifeblood, if you will.
Way to think about it.
Yeah. And so in this article, which talks about how Tether has been lending, making loans in Tether, they had a quote from an accountant. Because Tether's loans are denominated in Tether, their market value fluctuates with the price of Tether, and thus so does the market value of the company's reserves. Quote, if Tether falls and they have loans that can be repaid in Tether, then by definition, it's not backed up by a dollar, unquote, said William Vandenberg, an accounting professor at College of Charleston in South Carolina, who has written about Tether and followed it closely. So that's it. I mean, it's right there in print. Tether is not backed one-to-one because they are making loans denominated in Tether. It's there. It's right there. They're lying, right? It's obvious. And of course, Tether is one of those companies that hasn't done a full audit. They've only ever done a proof of reserves. And who knows if that is still valid or if the accounting firm has pulled that out. I think they started working with BDO Italia. We'll see if BDO pulls that report or not. All right, that's it for me for Crypto Land. Where do you want to go, David?
Do you want to jump into app news? Because I have one that can an app store that transitions us there.
Do it. Let me play the music.
So I think we mentioned maybe 2 episodes ago, as this mess of crypto keeps happening, the real winners in this are going to be companies that can figure out how to account for it properly, right? Assist with audits, help controllers and CFOs properly book really crypto to the balance sheet, debits and credits, right? Take crypto transactions and put it into debits and credits.
You mean not one of these companies made up Excel balance sheet like
you just can't do it that way.
Yeah.
So, and there's just beyond coins, right? You have the NFTs. You have there's a lot of crypto technologies happening, right? Assets in the metaverse, et cetera. So Bitwave is one of these companies. They just raised $15 million Series A to expand their crypto accounting software. Essentially what they're going to do with most of this funding, they're going to develop their Bitwave Institutional, which is their new product targeting enterprise customers with complex accounting needs, such as custodians and exchanges. So they're really creating product targeting these companies. Hopefully one of them stays around to become a customer maybe, but that's who they're targeting, like these customers. But what's interesting, I didn't know this, but the founders, which is kind of an interesting thing, this is from one of the investors, this is a general partner of Blockchain Capital, predicts that there'll be 100 times more enterprises in crypto 5 years from now, and all of them are going to need a product like Bitwave. You can't. The accounting is going to have to be done properly. There's no way around it. And then he was talking about the two founders. So the founders, you have Patrick White and Amy Kalnoky. He basically says that they're the only two people in the world that sit in this middle of this bubble, which is understanding of taxes and accounting, understanding enterprise software, and understanding crypto. There's not many people that can do all three. And it's very clear it happens when somebody only understands crypto and they don't understand accounting, like we get an FTX situation, right?
That's right. Well, that's awesome. So maybe somebody, like maybe Bitwave, will get the balance sheet sorted out. And do they integrate with QuickBooks? You know, could we have a multi-billion-dollar exchange summarizing its crypto into a QuickBooks balance sheet? Because I think, actually, that's a point I want to go back to, David, if that's okay. For just a moment. Yeah. You can use QuickBooks to run a multi-million-dollar company or even a multi-billion-dollar company. If you can summarize transactions, you can put them into any accounting software and you can create a P&L or a balance sheet.
I agree.
And so that's why third-party add-ons are awesome, and that's why QuickBooks Advanced is growing, because you can summarize data, put it into QuickBooks. It doesn't matter. You can be doing $200 million a year in revenue, and you can be in QuickBooks if you've got it set up right. So anyway.
It's been a very long time since you couldn't type a transaction more than $9 million into QuickBooks. You know, that was 30 years ago. Now you can put big old transactions in there.
Intuit, speaking of Intuit, announces enhancements to tax products. They are continuing to add to their Intuit Tax Advisor product, which we have talked about previously on the show. This is the product that helps you do tax advisory services and looked very interesting. I think we even played a clip of it at one point. So what is new? Now, if you're using Tax Advisor, you can select tax loss harvesting and cost segregation studies as strategies in Intuit Tax Advisor. You can edit multiple fields in an activity together before recalculation occurs. That's for like W-2s, K-1s, etc. You can gain more visibility into which tax fields are impacted by a strategy and more detail about the calculations. There's an enhanced error handling when users enter a strategy value that is not supported in order to easily identify and correct errors. Plus, strategies with errors will be excluded from client reports to avoid any confusion. They've improved their client report from reordering pages to editing strategy content. And they also plan to add the ability to select qualified business income deduction optimization as a strategy, and the ability to select converting self-employed businesses to an S corporation as a strategy, and a new self-help widget, blah, blah, blah.
That feature.
There's a lot of bullet points here in this release.
This episode of the Cloud Accounting Podcast is sponsored by Canopy. Did you know that Canopy has a partnership with the IRS? This means that you can now use Canopy to pull your client transcripts. The integration is approved by the IRS and can be configured to automatically pull transcripts. You can easily monitor if and when something changes. Now here's the best part. Once you have your client's transcripts, you can use Canopy's Notices feature to help you resolve your client's notices. Canopy has a library of 350 plus pre-built federal and state notice templates that provide an overview of the notice type, as well as walk you through the recommended steps to resolution. And Canopy can even create and autofill your IRS response letters. Canopy also integrates with QuickBooks Online, Xero, FreshBooks, CRMs, form builders, spreadsheets, calendars, email, and Zapier. They even have a mobile app, centralized file management, fillable PDFs, a client portal, task management, and the list goes on and on. To get a demo of Canopy and to receive a $40 Amazon gift card, head over to cloudaccountingpodcast.promo/Canopy. That is cloudaccountingpodcast.promo/CANOPY. Plooto. You're familiar with Plooto?
Plooto the dog. My son was just watching Mickey's Christmas special. So yes,
no,
Plooto.
Not that Plooto.
Plooto was the instigator of all of the drama in the episode.
No, this is Plooto as in the accounts payable, accounts receivable app for small businesses.
Yeah.
It's Plooto. They just secured.
Question, David. Is Plooto a planet?
This is not Science Hour, man. We are accounting. This is an accounting podcast. No accountants care. Our listeners don't care.
Sorry, I please continue.
So they have secured 27 million Canadian dollars, so 20 million USD, and their Series B. And what's interesting about this raise, two interesting quotes kind of came out of this from the founder. One of them is the observation that the number one reason why companies stop using their product is because they go out of business.
Oh, okay.
And usually Plooto is the last application they turn off. So as a business is having problems, they're going to still try to pay their bills, right?
Mm-hmm.
Or they're trying to get the receivables in so they stay on the product. So that was kind of interesting that their churn is usually because a customer goes out of business. And then the other piece of this is how they feel that in Canada, Bill.com and Melio are kind of ignoring the Canadian market, right? A lot of the U.S. bill payers are not in Canada. Mm-hmm. And so they think there's really they're well positioned to grow and just really take over Canada. And that's kind of their play on this.
Did you see that Wayne Chang is leaving Digits?
I did see there was a very, in the Digits way, that he had an overproduced LinkedIn letter that he's leaving.
Instead of just making a LinkedIn post, he posted a picture of a letter on a what looks like blue graph paper.
It was branded. It met the branding.
It's branded.
The Digits branded.
Yeah. It says, to the team, rocket ship emoji. Amazing. What an incredible journey we've been on together in the last 5 years. Working with you all has been an absolute privilege, and I am truly proud of the amazing things we have accomplished. As a 0 to 1 startup founder, my mission is to create magical, category-defining products that push the boundaries of what is possible, and together we have done that and more. From the industry's first real-time search with Digit Search to magical drag-and-drop financial reports with Digit Reports to the iconic Digits platform itself, we have truly made a mark on our industry and disrupted the status quo. And the company is now positioned better than ever. It has 4.5 years in runway. It has great investors. It has a world-class team. It has a multi-year head start in its core AI technology, and it has award-winning category-defining tools that customers are clamoring for. Now it is time for me to move on to my next 0 to 1 adventure. So there you have it. 4 years. And he has gone from 0 to 1, made an incredible category-defining product that has revolutionized the accounting profession. I think we can all agree. I mean, everybody uses Digits now, right, David?
Well, I mean, it's so far from done, if that makes any sense. And that's why I guess him leaving is kind of surprising. I don't know. We've been in this industry long enough where there's founders that are just in it forever, right? And there's people that see the accounting industry as a stepping stone, an opportunity to make some cash and move on. Right?
Yeah.
So
Xero has established a technology base in India. I saw this back in November. It's through a strategic partnership with Infosys, a global digital services and consulting company. So they're going to have a Xero-managed center of technical talent at the Infosys campus in India. India is the only country in the world that is not projected to have a shortage of professionals in the next few decades. The only one that's going to continue to create growth in that regard. And by professionals, white-collar workers, right?
Because they're still making babies. My understanding, even in China's going to have this weird population shift themselves.
Oh, yeah. No, the one-child policy in China is probably the most disastrous thing to ever happen to China, and nobody even realizes yet. The population's going to have they're going to have half as many people in China in not too long. It's going to totally
a huge aging population.
Yeah, I mean, they're going to turn into Japan very quickly. Japan's getting really old. Yeah, India's the only country that's of size that is continuing to produce lots of kids. And so
human capital,
which is the most important kind of capital these days.
That's how you make more accountants. People need to have more babies. The AICPA needs to be way earlier in the funnel now. That's the funnel.
You think maybe at AICPA Engage they could give out I was going to say AICPA branded condoms, but they could poke holes in them,
defective contraceptives. Or soften the funnel way up top. So I've talked about before, like a lot of I may have tweeted about it. Like I feel like for 2022, one of the most overused lines on most websites is faster close. Close the books faster. Like
that's thanks to Flowcast. That was me and the CMO there.
Okay. That was
I can't take credit for that catchphrase, but yes, that was.
Well, guess what? Now there's a company just called Fast Close.
Oh, it's just called Fast Close. That's smart.
It's called Fast Close. They just bypassed everybody. Yeah. Straight to it.
Is it not for fast? It's not for sales though. It's
fastclose.uk, and it's BI software that they say is a system with the ease of use of Excel.
Smart.
And this adds on to ERPs, and they're doing some automation stuff with. There's an ERP called nextworld.net. A lot of this is based out of Europe and the UK. But anyways, I just noticed, hey, Fast Close, they've just bypassed everybody.
That's amazing. U.S. banks, including Chase, are creating a plan to refund victims of scams on the Zelle payment network. I've been hearing about this for a long time, like all these frauds that are happening. And if you get scammed out of money using Zelle, like the banks are like, no help. They're like, sorry, your money's gone. And apparently the PR has been bad enough where now they're going to start working on this. That's all I got. That was reported in Wall Street Journal.
No, that's good. Good for the banks.
Help us out. Good way to listen to your customers, right? Build connections in Microsoft Teams with Games for Work, a new Microsoft Teams app. So now, David, if you haven't had enough...
Games for Work.
Yeah.
This is what we're getting to now.
Well, this sort of... wasn't there like an episode of The Office where everybody gets into playing like Call of Duty or something like that? I can't remember, but like they're all playing it like after work. I mean, playing games at work can definitely lead to team building. And in remote work in particular, like maybe playing games will help you build a stronger team. So I think this is actually pretty cool. So this is a new app from Microsoft that's built into Teams. According to a study by Brigham Young University, teams who played short video games together were 20% more productive than those who participated in more traditional team building activities. Oh yeah, and I would definitely rather play a video game with my coworkers than do a trust fall. Like any day, David, any day.
Why not just work on the work together? Just make the most sense.
Well, let's see what kind of games you can play. So you can play casual games such as Microsoft Icebreakers. I don't know what that is. Wordament, Minesweeper, and Solitaire. Wait, I thought Solitaire was a solitary game. Like
Solitaire and Minesweeper.
Man, it's amazing. It's kind of amazing that Minesweeper is still going. That was like the first app I ever used. Was Minesweeper on a Windows, And
they don't have to change it. It keeps going and going and going.
Oh, so Microsoft Icebreakers, here's what it is. Encourage new teams to communicate and learn about each other with ease. It's a variation on this or that, pineapple or pepperoni on your pizza. It's so simple and intuitive, you can't help but answer the question. It can also spur lively and at times passionate conversation to foster connections and build team morale. Actually, that pineapple and pepperoni question, like you're going to start some fights. With that one.
This is built into Microsoft Office, right? You probably get it for free.
Yeah.
Firms are going to be all over this. I think
it's great.
Firms are going to be all over this.
I mean, I might be joking around, but I think this is awesome. I think use this if you've got it. Like, this is cool. There's actually another feature of Microsoft Teams that is new. Microsoft Teams now has communities. So you can set up a Microsoft team like for your, pickleball club. And I saw this and I was thinking, actually, David, we've been talking about creating a community for our listeners for a long time. Maybe this is the thing we've been waiting for, because we kind of talked about doing it in Slack. We thought about doing it in Facebook.
Or any of these things.
But it's like, Facebook, really? We thought about doing it in, getting our own proprietary social platform. But then I've gotten invites for those, and you got to sign up for something and download another app. And nobody wants to download another app. So maybe if we just do it in Microsoft Teams, we can get people to actually do it. Because I know that, 80, 90% of firms, it's probably more than that, are on Microsoft stack versus, anything else.
Twitter might not be around next week, so we don't know.
Yeah.
Which right now is probably our number one community area.
Well, actually,
LinkedIn.
So Elon Musk, I think this happened today. We're recording on Sunday, December 18th. And Elon Musk tweeted out a poll asking, should I step down as head of Twitter? I will abide by the results of this poll. And currently, with 7 hours left, he is losing his own poll. 56% of voters want him to step down. So that's looking like he might have, if he actually abides, he's going to step down as CEO. By the way, almost 10 million people have voted on this thing. Is that crazy or what? 10 million people voting on a Twitter poll? It's just, what a world we live in, David. Did you ever imagine that incredibly important decisions as who is going to be the CEO of the social media platform that influences news coverage in this country is going to be decided based on a Twitter poll?
Well, I'm sure he has already made the decision because it's not a good use of his resources. Like, he's really smart. He just doesn't need to be in the day-to-day of Twitter.
Yeah.
And so
he shouldn't be. He should be freaking running Tesla.
He should hire a real CEO. He should hire a team. He needs to implement a management team and get out of the weeds.
SpaceX and Tesla. First of all, I really want to be able to visit Mars someday. So I really need Elon Musk to get back to focusing on his dream, which is to go to Mars and stay there. And he needs to just stay there on Mars, where there's a delay of like several hours before any communications from him will reach Earth.
And that's it for app news.
Yeah, I think that's it for app news.
You want to do some listener mail, maybe?
Yeah. Oh, yeah. Listener mail. Kate Johnson sent us a voicemail about education.
Hey, Blake and David. It's Kate Josephine Johnson here. Thanks so much for your reporting and thought leadership. I don't miss an episode. So I know you'll talk a lot about accounting education from the very first accounting courses all the way through the 150 hours for the CPA. And I found a unique college program that I'd like to share. This week, I talked with two current students in the Western Governors University accounting program. One is doing the bachelor's and one is doing the master's. This online university seems like a particularly good fit for career changers and transfer students. It is all online and you can move as fast as you want. The really interesting part is that you don't pay per class, you pay per semester. So for folks who are really self-motivated, these two panelists shared that you can get a lot of hours completed and move very fast, which saves you a lot of money. Undergrad semesters are less than $4,000 per semester, and graduate classes are less than $5,000 for the whole semester. The courses and the proctored test are available 24 hours a day, 365 a year. So you've got the utmost flexibility there. And the gal going through the master's program said that there is this subculture of students who call themselves the accelerators, and they are doing all the coursework for their master's program in just one semester instead of 3 or 4. And that means only paying for one semester of tuition, which is less than $5,000. Now, granted, most of those folks quit their jobs and are studying at every moment, but apparently there are real people that that are working hard and doing this. Even if you go at a slower pace, it sounds like a really affordable and flexible program. One final thing I'll add, though, is that this might not solve the CPA pipeline problem, because the gal getting her master's said she entered the program intending to sit for the CPA, but her own bookkeeping and advisory business has grown so much over the last year that she's questioning whether she needs it. She isn't worried about the test, but she's discouraged by the requirement in her state to work for another firm for a year, which doesn't seem like an ideal fit for her family situation or for her financially. So I'm not sure the extent to which the supervised hours requirement is a benefit or a hindrance in the modern accounting workforce. If anyone wants to hear those two students give all the details about the Western Governors University accounting programs, you can find it on the Bookkeeping Side Hustle YouTube channel. I wasn't endorsing the program or sponsored to do the interview or anything like that. I'm just on a mission to ensure bookkeeping professionals are just really, really smart at the debits and credits. So I'm always looking for great and affordable education opportunities. Keep up the great work, guys.
Wow, that is awesome. Thank you so much, Kate, for that intel. Western Governors University, wgu.edu.
So it's a good hack, right?
Yeah.
Find a place that's all you can eat classes and just knock all your stuff out in one semester. Just knock it all out.
Makes so much sense. And I think based on those prices, $4,000 or $5,000 a semester, yeah, I mean, it would be pretty aggressive to try and do it in one. But even at 2, you're spending about what I spent, I think, to do it. And it took me a long time because I did it over, years, really. You could just knock it out with the all you could eat.
So then the other half of her call, if I'm hearing this correctly, you get educated, you're competent, you create a business, you're out in the market is proving that you're a valuable commodity, but you have to throw that all away because you don't have experience at a CPA firm, so you can't go get your CPA.
Well, yeah, because that's one of the requirements, right, is that you got to have so many years of signed off experience working under a CPA, working for a CPA, which you got to wonder, is that really necessary anymore Is there another way to demonstrate competency or to get experience?
You mean like if there was just a test, if there was this test you could take to demonstrate your competency as an accountant?
Yeah, that would be great. If we had one of those, David. A test that really measured. Test? Yeah. It's just too bad we don't have one.
That'd be the way to do it.
Yeah, it would be great.
Other news.
Well, we got more listener mail, though.
Oh, another one? Okay, go ahead.
Yeah, well, so Ben Taylor said, hey, Blake, this just came out if you didn't see it already, and he linked to the crypto.com proof of reserves. Agreed upon procedures for a big crypto exchange masquerading as more than that. Haven't had a chance to dig into it, but I figured this is right up your alley. One hopefully good thing that comes out of this is that people may care about the distinction between different types of audit firm services again, or maybe that's wishful thinking. Thanks, Ben. And of course, I didn't even look at that until after it had been withdrawn. So that's the one that we were talking about, the proof of reserves that Mazars did. They got withdrawn. Yeah. And I think
click the link fast enough.
I think what'll happen is this is the problem. The average person can't distinguish between an audit and a agreed upon procedures engagement. And we as a profession should just not be doing that kind of crap. It's BS. And
it's a David Leary test. If I can't tell.
Yeah, dude, I can't even tell. I'm a CPA, David. This stuff I read those reports. I'm like, what did I just read? What does it mean?
Oh.
It's just total jargon and gobbledygook. And the only people who understand it are the people who wrote it and the people who came up with these ridiculous kinds of engagements. And yeah, it shouldn't exist. It's just too darn confusing. So thanks, Ben, for sending that our way, although it was made moot. Oh, last one, if you don't mind, David. Since we got the listener mail, we want to get through it.
Oh, listener mail, keep going.
Luke Templin has purchased findaily.io from Jason Stats. He said, hey, Blake and David, I have huge cloud accounting news to share with you. It is probably the most significant cloud accounting news of 2022, ... I have purchased, great way to start an email, though, if you want to get our attention. I have purchased findaily.io from Jason Stats. I raised funds via my kids' college tuition funds to acquire Findaily. Realize built Findaily to provide a daily financial digest on autopilot. Findaily is moving from alpha testing to beta testing in January. We would love for some of the listeners of the best accounting and finance podcast on the planet to join our beta. Your listeners can go to findaily.io to learn and join a waitlist. So go to findaily.io and tell them that you came from the Cloud Accounting Podcast. I'd love to chat more about findaily.io, but Jason Stats would be better. He's better spoken and looking. I don't know, Luke. In all seriousness, I love listening to your podcast. Hopefully we can have some drinks together in Vegas. Unfortunately, we did not, but thanks, Luke. And I'm behind on my mail, as you can tell. So I appreciate that, and good luck with that. That's awesome.
So I clicked on it. The concept seems kind of cool to me. So it's like mail merge in email, but instead of putting in people's address, you're pulling in data from QuickBooks or other things you've connected in, bank balances, etc. So you, in a way, instead of making everybody's like, oh, we need dashboards, KPIs, dashboards. Instead of making things that maybe your clients don't even want or care about, that's like very hard to do. Basically, you're going to write an email and you're going to connect it to, put the bank balance in every day in this email and send it to the client. And the client's going to be like, oh my God, this is amazing. That's kind of the vibe I get from the product. That's the product.
Yeah, it's just send data to the client via email or to yourself via email every day. And that's great. I don't have to log in to check my bank balance now. Or I don't have to log into...
It's just what they want, right?
Yeah.
Really.
I don't have to log into Xero to check my accounts receivable or, whatever it is. You can create a digest of unpaid invoices, overdue invoices, customers with a balance. It's all customizable.
I want to use it, and then I don't have to give you updates anymore, Blake.
Oh, thank you, David. You just sent...
I'm going to use this for this.
Subscribe me to some annoying daily email. I'm sure I will actually find it very useful. So, pretty neat. That's all the time we have for this week, David. If people want to get in touch with you, complain about, your opinions, where can they do that?
I'm on all the socials at David Leary.
I am at Blake T. Oliver. Please at me on Twitter until it implodes. You can also email us, cloudaccountingpodcast@earmarkcpe.com. You can send us a voicemail there. We love to hear from our listeners, and we will very, very, very likely play it on the air because we love getting voicemails that much. You can even promote your own stuff. We don't care. It's like getting a free ad, so just do it. I mean, you normally have to pay for those things, and it's a lot of money these days. So send us a voicemail.
And if you have any articles you see about trends of 2023, predictions. I started to bucket those in a little folder. I'll start going through those next week.
Is that what we're doing next week, David? Predictions?
Well, we're at the end of the year. It's getting close.
Yeah.
I don't know if it's next week or the week after, but I've started to put those articles aside. You know, these things like 50 trends to watch.
Yeah.
So I'll just put them aside and then see what's in them, see what's interesting. Hopefully the trend I want to see is that crypto just completely goes away so we can move on to 2023. And like, we're going to have to rename this like Crypto This Week or something. Crypto Weekly.
No, please don't. No. Let's get back to normal stuff. Yeah, with GPT-3, I feel like my predictions are all out. Like, everything is totally possible now. It's a very exciting time to be alive. Very exciting time to be an accountant. I know I say that at the end of every year, but it's getting better and better.
It's getting better.
It really is. Like, it's getting better. It's going to get a little worse before it gets a lot better. That's what's happening. So just stick with us, guys.
Gusto has proof it's getting better.
Really? You got another story for us?
Gusto they have real data from real pay stubs, and the average size of bonuses for accounting has increased 9% between 2021 and November of 2022.
Yes. Show us the money.
So your bonuses, if you're an accountant, your bonus is 10% higher this year.
Well, and
9.4%.
CPA Trendlines just said that CPA firm wages have surged 9% in the latest quarter. That's a lot. So, hey, maybe we're finally going to get paid what we're worth. I think that's something we're celebrating. And with that, David, we better go because my son told me that at 9 p.m. he's going to burst into this office and disrupt our recording session. So unless you want to see him, we better end the show.
We want to end with a Zoom nightmare.
No, we don't want to end with what actually happened to me on a webinar in the pandemic. All right, bye, David.
All right, bye, everybody.
Bye.
Time for the classifieds. Check out Hector Garcia's new app called Right Tool for QuickBooks Online. Instantly increase your productivity with keyboard shortcuts and more. It will save you seconds. The app is free at the moment in public beta. Check them out at righttool.app. That is righttool.app. RIGHTTOOL.app.
I don't care where you live in the United States. If you're a CPA, you have to take ethics continuing education. And I don't care who you are and where you live, you hate taking ethics continuing education. That's why me, Greg Kite, and my buddy, Adam Browd, we created a podcast called Drunk Ethics, where we unfold and expose all of the inner secrets of not just ethics, but how to become more ethical and to promote ethical behavior at your workplace. And we do that while we are getting progressively more shit-faced during the course of each episode. In each episode, we take 7 shots every 7 minutes. And so at the beginning, we are scholarly, and by the end, we are drunk yet still scholarly. If you're interested in this podcast, which I know you are, anyone can listen to the podcast for free. It's out there. You can find it. But if you want CPE credit for it, NASBA certified CPE credit, it is a premium course on Earmark. So if you're already a subscriber to Earmark, it's going to be more than that. But listen, it's worth it because of 2 reasons. First off, you know your company, you know your firm's going to pay for it and not you. And second of all, it's worth it, damn it.
Want to get the word out about your newsletter, webinar, party, Facebook group, podcast, ebook, job posting, or that fancy Excel macro you just created? Why not let the listeners of the Cloud Accounting Podcast know by running a classified ad? Hit the show notes for the link to get more info.